Welcome everybody. We'll get started in just a minute and just give a chance for everybody to join. Okay, welcome everybody. I'm Cynthia Gonzalez with the World Resources Institute, and today we're very excited to launch our science-based target financial sector framework. We have a 60-minute webinar and very tight schedule, and it's being recorded. We don't have time to take Q&A, but we will. We have the whole science-based targets finance team available today to answer your questions. So just please type them in the Q&A box throughout the webinar. So let's quickly review the agenda before we get going. We're honored today to have opening remarks first from Mark Carney and Gonzalo Muñoz. And then we'll be spending some time doing an overview of the framework and tell you about each of the pieces that we're launching today. And then we'll get to hear from Aden Frishberg from Amalgamated Bank, who's going to give us a bank perspective and the business case for setting science-based targets. And Amalgamated is one of the 55 financial institutions that have already made a commitment to set science-based targets. And then next, we'll spend a little more time looking deeper into the guidance that we're releasing today, as well as provide information on the target validation process. And then we'll just spend the last few minutes talking about next steps for the project. So here's our speakers today. You'll be hearing from Mark Carney, the Special Envoy for Climate Action and Finance, the UN, and then Gonzalo Muñoz, UN High-Level Climate Action Champion for Chile's COP26, and then hear from Aden Frishberg, the Director of Impact Policy from Amalgamated Bank. And then you'll hear from a number of the members of the SBTI finance team, Nate and Chendan from WRI, and Donald from WWF. So just to provide a little bit of context for what we're announcing today, the Science-Based Targets Initiative was launched in 2015, and since then we've made a lot of progress. We're close to having 1,000 companies with commitments to set science-based targets, and about to reach our milestone of 500 companies with approved targets. And these companies represent 22% of the global Fortune 500. So 55 of these companies are financial institutions, and that have made commitments to set science-based targets. And when we launched the initiative, we had an understanding that financial institutions play quite a unique role in the economy, and different framework was going to be needed for them to set science-based targets. So we're very excited today to be launching this first ever framework available for financial institutions to set science-based targets for various asset classes in their portfolios and have those targets validated by an independent third party. So I also want to mention that this is really pioneering work, and it's evolving over time. So while we're hitting a historic milestone today by launching the first version of the framework, this is a work in progress. And we plan to evolve as best practice, as we get a better understanding of best practice, and we gain a better understanding of what metrics and targets can really drive on the ground emission reductions. And so we will be updating the framework on an annual basis, just like we do for our framework for companies to set science-based targets. And so finally, I just want to introduce the whole science-based targets finance team. Everybody here on this slide has made an invaluable contribution to the initiative. And this framework, represents all the views of all our stakeholders and the team. And the robustness of the framework represents, all the contributions of everyone here. So just a big thanks to everyone. Since we have a tight agenda, not everyone has an opportunity to speak, but many of the other team members are on the call, on the webinar, and available to answer your questions throughout the next hour. So with that, I'll turn things over to Mark.
Great. Thank you, Cynthia. And let me add my congratulations to the Science-Based Target team for the great work that they've done. Let me just start off by putting this into the context of what we're trying to accomplish by COP26, November 2021 in Glasgow. And effectively what we want to get to is a situation where every financial decision takes climate change into account. So just as they would take interest rates into account, credit risk into account, future cash flows into account, would take into account as one of the determinants of risk value, risk adjusted returns, where an asset, a company is positioned with respect to climate change. And so this is an essential building block of that framework. Of course, it starts with reporting based off of TCFD standards. And I think as many of you will know, one of our objectives by Glasgow is not just the refinement of the TCFD standards, which of course are voluntary for the private sector, but establishing pathways to make that mandatory. And there's a fair bit of momentum and a fair bit of ways that is going to happen. The second big building block is directly on point to what we're talking about today, which is for companies to have net zero transition plans. It's increasingly commonplace. Cynthia just put up the numbers, almost a quarter of Fortune 500. Again, a lot of momentum behind that. But then the issue becomes, how do you translate those plans? How do you judge those plans? And how do you judge finance and how finance is positioned with respect to those plans? Now, as the SBTI work has shown, and we very much agree with this, that the emerging best practice for company transition plans in the real economy, if I can put it that way, is to have scope 1, 2, and 3 emissions, to set out clear short-term milestones so stakeholders can judge, to have effective board level governance, and ideally also to have an element of executive compensation tied to the achievement of those milestones. Now, in terms of judging the position of finance, what we've been looking at is there are various degrees of sophistication, and this is what you're going to see today is at the most sophisticated end of the spectrum. So the most rudimentary way for finance, and there's value in this, I'm not disparaging it, but the most rudimentary way is just to have a sense of what proportion of assets that a financial provider has that has TCFD disclosure. Next level, what proportion of those assets have net zero transition plans. The third level is to assess progress against SBTI pathways. And then of course, the highest degree of sophistication is to map that which map it into a form of portfolio warming or degree warming of the portfolio to judge the aggregate impact of the portfolio, which is what we're seeing today. So let me just say, from our perspective, this is a credible framework. It's ambitious, and then it includes scope 3. It's sophisticated. It's at the sophisticated end of the spectrum, and we think it can be very valuable. There is, this will iterate, just to be clear, as just like TCFD and other things have iterated as they've been put into action. One of the issue is, as we all know, that there's momentum around company transition plans, but there's still a big gap, and there's more than half of the assets will not have transition plans yet, so they'll end up being defaulted to a, I think 3.2 or 3.25 portfolio warming, which will drive, in some cases, a lot of that. Of course, it sets up a positive cycle to encourage companies to develop these plans and disclose them. There are other issues around ways of aggregating the portfolio, individual company and asset levels, and bringing it up to the level of the portfolio and the judgments around that. But again, the sophistication of the sector, I think, is going to drive this. We have a team, the COP26 group has a team led by David Blood. It's a private sector team with a number of other stakeholders there that are looking at a series of approaches, of which is, again, I would say this is the most sophisticated, and we're working closely with SBTI for that. Expect in November, the 1 year pre-anniversary, if I can say it that way, of COP26, that the report will come out from that team, which highlights some of the best practices and then works on a consultation so that we can really embed this approach through finance. So by the time we get to COP26, things are not just under construction, and you can hear construction behind me perhaps, but actually fully completed and fully actioned so that we can move to our objectives. So let me just finish by, again, I want to thank SBTI, CDP for the great work that is being revealed today. I want to commend people like Aden and Amalgamated Bank, who are the early adopters and the leaders in this, and just underscore that we view this type of approach as something that's fundamental to a system that mainstreams sustainable finance. And ultimately, the providers of capital, whether you're a bank or an asset owner, insurance company, asset manager, anybody in between, have a responsibility to show to everybody whose money it ultimately is, where they are positioned in terms of supporting the transition to net zero and helping to seize what is one of the greatest opportunities of our time. With that, Cynthia, thank you for having me. And again, congratulations on today's launch. I'm looking forward to hearing more as we go forward. Take care.
Thank you, Mark, for your remarks, and looking forward to seeing your report later this year. And with that, I'll turn things over to Gonzalo, who will also be providing some opening remarks.
Thanks so much, Cynthia, and thank you, Mark, as well, and congratulations on your unique leadership, setting the base with TCFD for what we're living today and celebrating today, right? And thanks also for the collaboration that we're having around the November dialogues. By no means we can reach the goals of the Paris Agreement without the engagement and leadership of the financial sector. That's something that's getting clearer and clearer every day. And to address the climate emergency on time, we need a radical shift of capital flows from high carbon to zero emissions across all sectors and geographies in this decisive decade. And as a high-level climate action champion from a developing country, allow me to also reinforce the relevance of the geographical diversity. This financial flow shift cannot be just among European and some North American entities. As if we want to really fulfill the Paris Agreement, we must accelerate this transition on emerging economies and all developing countries. We have seen already some really clear and enthusiastic lights of commitments from some Latin American institutions like Bancolombia, Itaú, BCI, Banco Galicia, Marae. So I think the region, at least this region, but hopefully many other regions are all ready to really embrace these science-based targets for the financial sector. Since we launched since the launch of the Net Zero Asset Owners Alliance, we've seen an increased interest from the finance community on climate all around the world. In only 1 year, they more than doubled their membership from 12 to almost 30 investors today, with about $5 trillion in assets, all working together to add tools to guide financial institutions in setting and meeting overarching targets to reduce their greenhouse emissions. So this is why this framework launched today by the leading partners of the SBTI is so important. With a set of target setting methods and tools, the SBTI will support financial institutions to develop their targets aligned with net zero emissions. This includes engagement with Sorry, I think I might have lost you, Cynthia?
No, we can hear you now, yes.
Oh, okay. Okay, great, thank you. So this is why this framework launched today by the leading partners of the SBTI is so important. With a set of target setting methods and tools, the SBTI will support financial institutions to develop their targets aligned with net zero emissions. This includes engagement with investee companies to spur them to commit to net zero emissions before 2050. Also engaging with policymakers to press for important policy reforms. For many financial institutions, it also will entail shifting assets allocations to pivot away from high carbon holdings and scale investment in climate solutions opportunities. And as is always the way with SBTI, this was done through an inclusive and multi-stakeholder process, which allowed them to present the framework already with the public commitment of 55 financial institutions to set their emissions target reduction aligned with the Paris Agreement. Once again, the partners of the SBTI are leading the way by providing companies with clear pathways to reduce their emissions aligned with science. With my friend and fellow high-level climate champion from UK, Nigel Toppings, we set the ambitious goals to increase by 10 times the members of the Climate Ambition Alliance through the Race to Zero campaign, and finance is at the very heart of this Race to Zero and the fundamental transition to a net zero emissions economy. We're doing well, but we will need many more in the months to come. So we encourage all of you today to engage in this process, set your targets and join us in this Race to Zero so we can all meet in Glasgow to celebrate 2020 and 2021 as those years in which all actors of society aligned under the goals of the Paris Agreement. We have seen how COVID-19 accelerated the implementation of ESG metrics into the financial sector in so many regions around the world, incrementing the search for resilience. The step we're taking today is clearly not only a fundamental one, but also the smartest one that will allow us to accelerate on our Race to Zero. Thank you very much.
Thank you, Gonzalo, for those remarks and the call to action. And next, we're going to go to Nate and Donald, who are going to give us an introduction to the different elements of the SBTI finance framework.
Great. Thank you, Cynthia, and thank you everyone for joining. We have been working on this project for a couple of years, and today the purpose of this webinar is to launch our framework. So I'll be giving a fairly high-level overview of the framework, and we have much additional information that I will be pointing you towards as well. So the next slide just gives a list of the 58 financial institutions that we have that are publicly committed to setting science-based targets at this point. So these are part of that group of 1,000 that Cynthia mentioned earlier in the introduction. And I would note that they come from 22 countries. So this is already trying to achieve what Gonzalo mentioned in terms of having a global approach here. This is, if we could stay on that slide for a moment, this is a diverse group of banks, pension funds, asset owners, asset managers, private equity. And this is part of our target audience. Back when we launched this in 2015, when we launched the Science-Based Targets Initiative, already 10 of these financial institutions committed to joining and to setting their own science-based targets. However, we held them in abeyance until now because we didn't have any clear framework for assessing their investment and lending portfolio targets. And so that's what we are releasing today. So the next slide gives an overview of the process that we have been engaging and leading over the past 2 years to get to where we are today. So it really started, well, you could start it any time you want, but it's the SBT initiative started in 2015, 5 years ago. We knew all along that financial sector was going to play a very important role as reflected in the Paris Agreement Article 2.1c, but we didn't have the capacity and resources to launch this project until 2018, when we launched it in September with an expert advisory group meeting. We are very fortunate to have a strong expert advisory group that includes 37 people from a range of financial institutions all over the world, as well as other stakeholders from academia, think tanks and foundations, and elsewhere. And so that expert advisory group has really helped us to steer this project over the past couple of years. And they are listed individually in the guidance document if you want to see who is there. We started this project, as you can see, in 2018 with a survey of existing methods, and we developed some draft methods that year. And then in 2019, we did some road testing of those methods in order to understand what financial institutions felt was ambitious, but still feasible and actionable and credible. And so that was very helpful. We led numerous webinars and in-person meetings. The method road testing culminated with a workshop 1 year ago, obviously a different time where we could all meet in person for a workshop during New York Climate Week. Last year, we also began the drafting of the criteria, which are sort of how we connect these methods with individual institution targets. This year, we've really been focused on that criteria development process. And so we conducted a series of in-person workshops in London and Tokyo in February to get more feedback on our draft criteria. We've been refining them through the year. We also began to develop a tool, an additional tool this summer, including some beta testing that we will talk about a little bit later, and the guidance document, which we're also releasing today. So today is really, we're celebrating the launch of this framework, and it's the start of a pilot period, which will run from October through April of 2021, when we expect to produce updated criteria and guidance. So as Mark mentioned, this is an iterative process, and that is when we expect to have the next sort of, next iteration of the criteria at least. So the next slide gives just a summary of the framework. It includes these 4 components that you can see here. So we started with the methods last year, criteria, we developed some tools this year, and then the guidance document includes sort of everything all together. So you can see the components today are now all available through our website. These are just snapshots of the 4 components that are available. So the methods documents, the criteria, there's a separate tool website now that's linked from our main project website. And then of course the guidance document. The next slide gives some more information about the methods. So as I mentioned, we did a full sort of survey and sweep of available and existing methods. And we road tested several of them that we felt could link with the Science-Based Targets Initiative as it already existed back in 2019 and 2018. And we selected these 3 methods for this current iteration of the financial sector framework. So the first method is a physical intensity based method, and that's what we call the sector decarbonization approach. We developed this method back in 2015, and it leverages the International Energy Agency's Energy Technology Perspective series of scenarios, particularly the beyond 2 degrees scenario, which is roughly a 1.7 degree stabilization pathway. The second two methods here are the portfolio coverage approach and the temperature rating approach. And these are both methods that have been developed to guide engagement. And so the portfolio coverage approach simply says that a financial institution can cover their investment and lending portfolio by engaging with their investees to have them set their own science-based targets. And so this is a financial sector analog to the supplier engagement targets that we have with companies in the real economy that have large upstream emissions from their purchased goods and services or their suppliers. And so this is the application there. And the way that we've structured that in response to feedback from the road testing process last year is that financial institutions need to engage their investees such that they're setting science-based targets so that they will have full coverage of their portfolio by 2040. And finally, the temperature rating approach is a new one that has been developing within the Science-Based Targets Initiative since the 2018 IPCC report on the special report on 1.5. And after that report was published, the Science-Based Targets Initiative turned and assessed all of the approved targets from companies that we had at that point in terms of whether they were 2 degree aligned, well below 2 degree aligned, or 1.5 degree aligned for their scope 1 and 2 target. That was sort of the initial kernel. Now we've broadened that with more scenarios, a broader temperature range, and a broader group of companies, and to also look at scope 3. And so that is the temperature rating approach, which has also been codified into a tool, which we will elaborate on in just a minute. So these three methods are what we have now for this interim phase. We do expect to review additional methods as they become available. And we do understand that these three methods are not definitive and conclusive. They will be iterated and there will be additional methods. And we certainly understand that and appreciate that. As you can see on this slide, we've selected 4 asset classes to keep this iteration of the Science-Based Targets Initiative framework sort of focused and bottom up and straightforward as possible in terms of the linkages between the actual investments and climate outcomes. And so the asset classes are real estate, mortgages, electricity generation project finance, and corporate instruments. And for the first 3, you can see we use that physical intensity approach, which for buildings is expressed in terms of gram CO2 equivalent per square meter. And for electricity generation project finance, it's gram CO2 equivalent per kilowatt hour of electricity generated. For corporate instruments, it's a broader category, obviously. And so we include all 3 of the methods that we've selected. That is the physical intensity based methods, as well as the engagement oriented methods. The next slide, I will pass it over. Oh, no, the next slide is on criteria. And this has been sort of central to the process. And the criteria have a separate document, as I showed on an earlier slide, as a separate PDF. It's about 20 pages. There are 22 criteria, but this slide just gives sort of a summary. And what I'll just say very briefly is that we've gone above and beyond what we do with companies. We're in our 5th iteration of company criteria now. This is the first iteration of the financial institution criteria. And the main differences here are, of course, around scope 3, but also reporting, where financial institutions are required to report the actions they're taking to achieve their target and the strategies that they're using that they expect to achieve the target and why they've selected particular actions. So we encourage everyone to take a look at those criteria before developing their target. Now I'm going to pass it to my WWF colleague, Donald, to describe the tool.
Thank you, Nate. So I'm just going to essentially spend a minute on getting you through the temperature scoring and portfolio coverage tool. This is a tool primarily aimed for equity and bond portfolios, but could be used for other asset classes as well and other assets. It's an open source and fully transparent data and UI agnostic workflow tool, essentially for portfolio managers and analysts. We have developed this within the SBTI together with our development partner, Ortic Finance and OS Climate. And we have also engaged with a number of data and service providers and users in order to get this right. You can integrate this via Python or an API into commercial platforms and into asset managers and asset owners' in-house portfolio management solutions. And it's currently supported with data and solutions by Bloomberg, CDP, ISS, MSCI, Ortic Finance, OS Climate, Truecost, and Urgentum. And the whole idea with this and the purpose of this tool is to provide analysis and modeling and reporting for alignment and target setting purposes. You can also find much more on the website. You see the link down on the right around this tool, including a Jupyter notebook that takes you through the whole process of setting a target with an interactive code, so you can run with your own data, and there is also dummy data provided there. With that, I hand over to Nate to get you through the rest. Thank you.
Thanks very much, Donald. And I just want to note that this today obviously is a very high level and brief introduction to all of these resources, and we will be elaborating on all of this in subsequent webinars, and the materials that we're publishing today do have much more description than we have time for today. So the fourth component of the framework is the guidance document. This is the PDF that's now available on our website, and it's 168 pages, so it does contain a lot of information. It includes the method descriptions that I mentioned. It includes the criteria. It includes a description and sort of how-to of the tool that Donald just described. And it also includes 8 case studies from these financial institutions you can see here, where they have actually taken the methods that we've developed and applied them to their own situations, and described how that goes. And so we hope that these case studies are valuable for other financial institutions seeking to learn more about these methods and learn how they can use the methods to develop their own science-based targets. That is the bottom line today, is that we are providing these resources so that financial institutions can develop and submit science-based targets for their investment and lending portfolios. One thing I just noticed in the questions that I glanced at briefly, there was one about coverage, and that is another provision where the criteria go above and beyond what we do with companies. And we specify the coverage requirements per financial product. And of course, that's elaborated in depth in this guidance document. The next slide just gives some context here. So just sort of stepping back a little bit, we are keenly aware that there are numerous financial sector initiatives that are working in this space, and many of them predated our project in this space. What the Science-Based Targets Initiative brings here that's unique is the 470 company-approved targets that Cynthia mentioned in the beginning, but it also plays a bridging role between those high-level commitments that Mark and Gonzalo mentioned in the beginning, with actual tangible near-term targets in the next 5 to 15 years, as well as required reporting on how they're actually going to meet those next 5 to 15-year targets, what actions they're taking. And that is really our belief in terms of having the most impact here. There's an ongoing debate about impact, quantification, and attribution. And we believe that this orientation towards targets and actions can be a useful complement to the other initiatives that are out there. We don't believe that this replaces these initiatives or displaces them in any way. So we seek to harmonize the Science-Based Targets Initiative finance framework that we're publishing today with these and other initiatives as they arise. With that, I am happy to pass the mic to Ivan to describe the situation, the perspective from Amalgamated.
Okay. Thank you, Nate, Cynthia, and the entire SBTI team. An incredible amount of work, and as you've acknowledged, it is really iterative and ongoing, and so we're excited to be working with you as a part of this. Also, thanks to Mark Carney and Gonzalo Muñoz for their framing remarks and for grounding the importance of this work and its place in meeting the broader goals of finance in addressing the challenge of this climate crisis. Again, I'm Ivan Frishberg. I'm the Director of Impact Policy at Amalgamated Bank. Amalgamated was one of the first U.S. banks to commit to SBTI, and our approach to this issue is very deeply rooted in what we believe to be an extremely strong business case, but it is also one that is a values-based case and one that is personal to our leadership, who see obviously the crisis for what it is at a human level, but also for what our collective responsibility is in meeting this challenge. Amalgamated came to this, after several years of work with other banks to establish a harmonized standard by which we measure financed emissions in our loan and investment portfolios. Since this was launched at the Paris Climate Summit almost 5 years ago by a group of Dutch banks, it has existed as an initiative backed by a little bit more than $2 trillion in assets, and PCAF, the Partnership for Carbon Accounting Financials, now stands at about 14 trillion. And in a month, we'll launch the first global standard for measuring financed emissions across 6 asset classes. For many of those institutions, this was about addressing a key data gap in assessing transactional and systemic risk. For others, it's about the building block to Paris alignment and net zero, as Mark outlined. For others, it's about managing portfolios to transition to sustainable finance and product development, as Cynthia was referencing. But whatever the rationale, it was clear to us that this measurement of financed emissions is step 1. Step 2 is a sort of robust and tailored CDP disclosure, and SBTI is step 3. And that is, I think, where we are today and why it's such an important moment. We have been, on the road to this and waiting for this for a long time, but these tools give us the next level of information that we need to be a stronger, fitter bank in a low carbon economy. We have measured our calorific content, so to speak. We can now get a doctor's opinion in SBTI on the different metrics we need for a healthy future, and we can set about to do the work of business planning to get there. SBTI is a really critical step for the financial sector, and at Amalgamated, we have placed great value in the rigor, transparency, and universal approach to this work. We need that as an industry if we're to be fully trusted and incorporated into the rest of the economy that is being built by both policymakers and clients in the real economy. As Cynthia noted, nearly 1,000 corporates have committed, 8,400 companies are reporting to CDP, and we believe it's critically important for the collective work of climate alignment to be fully integrated between the corporate sector and the financial sector. We need to expect more from both, very clearly, but we need to understand that our progress for either is connected to the other. We can't reshape the economy without the full leadership and support of finance. We can't lead from the financial sector without the full engagement of the corporate sector in the real economy. So SBTI and the new tools being launched today for the finance sector are going to be one more step in this collective effort and to ensure that it is a harmonized effort. Just to wrap up, we are very excited as a company to begin this next phase of the journey. We've already begun responding with our portfolio and aggressively growing our sustainable finance asset classes, and not just through organic growth, but through shifting of assets and allocation. We now continue this work with even more data and tools because of the work of SBTI. And we hope that more will join us because together it's really the only way that we can conquer this crisis. And with that, I believe I'd turn it back over to the SBTI team.
Thanks, Ivan, for those very helpful comments. Yes, and now I'll turn it over to Chendan, who will tell us about the target validation process.
Thanks, Cynthia, for the introduction. I'm Chendan from the World Resources Institute. So today, we're very delighted to share the pilot version of the financial sector science-based targets guidance. The guidance is the element in the SBT financial sector framework that connects the three other components together. It's a one-stop shop to support FI's target submissions to SBTI. It includes business case for setting SBTs. It includes the criteria, method descriptions, and tool documentation. And it guides the readers to set targets for their investment and lending portfolios using these resources. It features 8 case studies from global financial institutions on their application of the various methods. It also provides recommendations on how financial institutions should communicate their targets and their planned strategies to achieve their SBTs. And last but not least, it also provides recommendations on the various steps FIs can take to achieve their portfolio SBTs. So next, I'll elaborate a bit more on the last 2 elements. It's very important to ensure that financial institutions communicate their targets in a way that's consistent, transparent, and comparable. So we have developed target language templates for financial institutions, and that consists of a scope 1 and 2 target following the target language template. And on the right side, I'm showing some example targets. Because FIs will likely have multiple asset level targets on their portfolios, to simplify the communication of these targets, we also created a headline target template to describe for which asset classes targets are set. And because current methods are not comprehensive and our criteria is flexible on certain products, we would also like FIs to communicate how much of their total portfolios are covered by targets. So on the right is an example of the headline target. And lastly, we also provided specific target language templates for asset level targets. And here are 2 examples for SDA for real estate and SBT portfolio coverage. Financial institutions are different from other economic sectors in that they provide finance and other services to other companies, but they don't have direct control over the emissions reductions of their borrowers or investees. That's why we think it's very crucial that FIs provide transparency to stakeholders about the actions they're taking to achieve their portfolio targets. So as part of the criteria, we are requiring FIs to submit a brief summary of the actions they plan to take to reach their portfolio SBTs at the time of target submission and explain why they had selected these actions. And then upon target approval, this summary will be published alongside the SBTs on the SBTI website. And you can find more information on the detailed target language and action reporting template in our guidance and a submission form that's going to be prepared specifically for financial institutions. And today we're also very excited to launch a pilot target validation phase for FIs. So on this slide, you can see SBTI's 5-step call to action process. We're inviting all FIs to follow this process to commit to SBTI, develop targets, submit your targets for validation, communicate your approved targets, and disclose your target progress. And starting from today, financial institutions have 2 years to have their targets approved and announced by SBTI once they commit. And if you're an FI that has already committed to us, you have 2 years from today to complete these steps. And we invite you to familiarize yourself with our tools and resources and start developing targets. And for the pilot target validation phase, we're also providing free submissions for the first 20 financial institutions on the first come first basis. The target submission form specific to FIs will be posted on our project website. And in the meantime, please contact us to express your interest or send us questions at targets@sciencebasedtargets.org. So Now I'll shift back to Cynthia.
Yes, thanks, Chendan. So next we're going to go to Nate, who's going to discuss next steps and answer a few questions.
Great, thank you. Thanks, Chendan, and thanks, Cynthia. So before we go into the phase 2 strategy, I'll just pause for a moment to answer a couple of the questions that I've seen go by. I haven't seen all the questions, so but one that I think is pertinent to many institutions is what if an investor wants to get SPTs validated, but 50% or more of the assets are not covered by the methodology? And this is a very good question. The framework that we're releasing today only covers those 4 asset classes that I mentioned. So real estate, mortgages, electricity generation, project finance, and corporate instruments. And within corporate instruments, of course, there's some delineation and definitions. And the basic requirement that we have here is that financial institutions formulate targets where there are available methods and coverage, but also that they publicly disclose with their target how much of their investment and lending portfolio is actually being covered by the target. The SPT initiative is obviously a voluntary initiative and voluntary platform, but we're also keen to maintain transparency so that it's clear what exactly is being covered here and what is not being covered at this phase. I think there's numerous other good questions, but I'm just gonna plow through the next steps section first, and then if there are others that my co-panelists wish to answer, please jump in. So in addition to being the day that we launch the framework, today is also the first day of our phase 2. So phase 1 has been the past couple of years. And now for phase 2, here, this slide presents some of our key goals and activities. So the first is obviously launching this framework and this phase of the project. So we'll be doing sort of a tour to socialize this framework and educate stakeholders about what's in the framework. So we'll be doing outreach and training webinars and collaboration with other institutions and companies. The pilot phase is, as I mentioned, defined by sort of this 6 months. And next April, the entire Science-Based Targets Initiative, including the finance sector project, but also our other sector projects and just company-focused work will update our criteria. And so our expectation is to update the financial sector criteria in April as well. As Mark mentioned, there is much interest and focus on net zero transition plans and frameworks nowadays. We work closely with some of those initiatives, and we are pleased to see the Science-Based Targets Initiative framework serving as sort of an interim role there for how to make sure you're on the path to achieving a net zero target. Last month, the Science-Based Targets Initiative released a net zero foundations paper focused on companies, and we initiated a standard development process for net zero standard. And we do anticipate initiating some kind of process around net zero for financial institutions as well. It's clear that net zero is an area of quickly growing communication. We also, as I mentioned, are aware that the asset class coverage here is not comprehensive. For insurance companies, we do cover investments, but we don't cover underwriting at this point. We just haven't had the capacity to develop those methods. But of course, that's not to say that it's not essential for achieving the Paris Agreement. As Gonzalo mentioned, broad participation is important here. And so we are considering different asset classes to focus on in our next phase of work, and open to discussion with stakeholders about this as well. And then finally, we recognize that these three methods that we're using in this phase are not comprehensive or conclusive. And so we do plan to develop a clear process for reviewing additional methods. As Chendan mentioned in her section, the criteria that we have now are developed on the basis of our methods. And so there does need to be sort of a broader process for integration and making sure that this is consistent and doesn't provide inconsistencies or undermine the existing methods. The next slide gives just an overview of some of our upcoming training and webinars. We do, as I said, plan to do sort of a roadshow here. And so in a couple weeks, we'll be doing tool training webinars for both users and developers. And so we plan to have them 6 hours apart. So within Europe, it would be 9 a.m. and 3 p.m. CEST in order to be accessible to both Asian and North American participants. And the first webinar will be focused on users, and the second more for technical developers. After that, we do plan to have a series of SBT webinars in Southeast Asia and in Australia. And so what we've put on this slide are the portions of that series that are focused on financial sector and this framework. So that'll be October 15th and then November. And then we do plan to have a dedicated Science-Based Targets Initiative deep dive webinar to walk financial institutions and other stakeholders through the methods and criteria in November, once we've gotten some preliminary feedback and had a sense of what the largest questions and challenge areas are for financial institutions. So those are the upcoming webinars. All of the information that I presented today is available, that all of the presenters from SBTI presented today is available on the project website. There's a screenshot of it here. And the first button on that website is a sign up for the mailing list. If any folks are interested in learning more about this and being updated on new releases and the webinars that I just mentioned, the mailing list is the easiest way to do that. And the website is really useful for looking at what's happening among companies and other sectors as well. So really the bottom line of this framework and the SBT initiative more broadly is the targets that are developed by companies and financial institutions. So this pilot phase is going to be essential for defining what that first wave of targets really looks like for financial institutions. So we're very excited to launch this first phase and grateful to all of you for joining the webinar today. With that, I will just check if any of the co-panelists wish to make any other remarks.
We have a few minutes, enough time to answer a couple questions live, if anybody would like to do that.
Sure, I haven't really had a chance to read all the questions, but I mean, I see some about, existing, how this relates to other tools and approaches. And we are seeking to harmonize the framework that we're publishing today with additional methods and approaches. But many of those are sort of ongoing in development as this is. And so we certainly appreciate any collaboration with other initiatives and look forward to harmonization discussions. Unless any of the other panelists wish to jump in, then I think we can just go to the last slide and yeah.
Yeah, and with that, I just want to thank everybody for joining and look forward to seeing target submissions from banks, asset owners, and asset managers. in the coming months. And just another thanks to the whole Science-Based Targets finance team that includes colleagues from WRI, WWF, CDP, and our technical partner Guidehouse for all their contributions to this work. And we're really excited to hit this important milestone. So thanks everybody again for joining.